Nobody told me this either. When I started in this business, that you can buy a home, move into it, and have your tenants pay for most of your mortgage. Well, it's completely legal. The loan rules actually reward you for it, and most first time buyers have no idea it's an option. It's called house hacking, and by the end of this video, you'll know exactly how it works and whether you qualify. So let's get into it. So here's the deal. House hacking just means when you buy a home, you with more than one unit, a duplex, a triplex, or a fourplex, you live in one unit, you rent out the others. You're the owner. You also are a resident and you're collecting rent checks from the same building you call home. Now, why does this matter so much? Because when you live in the property, you qualify as an owner occupant. And owner occupant financing is a different world than investor financing. That means a lower down payment. It also means better rates, easier to qualify, and the system was built for people who live where they buy. And house hacking lets you use those rules while still building a little rental business under your own roof. So why the loan rewards you? Here's that part that surprises people. As an owner occupant buying 2 to 4 unit property, you get access to the same low down payment programs as someone buying a single family home. FHA, for example, lets you buy a 2 to 4 unit property with as little as 3.5% down, as long as you live in one of the units. VA, if you've served, you may be able to buy a multi-unit property, owner-occupied property with no down payment at all. And here's the kicker. With most of these programs, the lender can count a portion of the projected rental income from the other units to help you qualify for the loan. So the tenants aren't just helping you after closing, they're helping you get approved in the first place. So let me say that plainly. The rent you're going to collect can actually boost how much home you qualify for. That's the rule almost nobody tells the first-time home buyer. So you may qualify for down payment assistance. In a lot of cases, you may qualify on top of this, which means even less out of your pocket to get in the door. So let's walk through it simply. Say you buy a duplex, you move in one side, you rent out the other side, and let's say it's about $1,800 a month. Your total mortgage payment is $3,000. That tenant's rent just kicked your real housing costs down to $1,200, which might be less than what we're paying to rent an apartment with nothing to show for it. Now multiply that out. You're building equity, you're getting tax advantages, someone else is paying down your loan, and a few years down the road, you can move out, rent your unit out, and now the whole building is working for you while you go buy your next home. That's how regular people quietly build real wealth, one smart first purchase at a time. So house hacking isn't for everyone, and I'm not going to pretend it is. It's a great fit if you're okay being close to your tenants, you want to lower your cost of living, and you're thinking long term about building wealth and not just buying a house. It's probably not your move if you need total privacy and the idea of a tenant sharing a wall makes you want to scream. And that's fine. There's always plan B, and nobody leaves my office without a path forward. So that's exactly the kind of thing I walk my buyers through step by step. So let's get you home.